Hi guys, this is Karina Borgia-LaCroix, the title girl and owner of Americanrealtitle. It's been a little bit since I've done a video because the summer hit me and I decided to go on vacation. The kids were off at school, but all the kids are back in school now. We're back in business. And today I have an exciting guest on to explain something that is really important in our real estate world and in closing. So I would like to introduce Marena. She's a CPA and owner of Allure International Tax Consulting. They're located in Bonita Springs. And today we are going to be talking about foreign sellers and FIRPTA. And I know some of you have asked me those questions before, and I can give you a small answer, but I always say I'm not a CPA. You need to contact a CPA. So today I have her here, and this is going to be a really big treat for my real estate clients out here. So without further ado, this is Marena.
Hi, everybody.
All right, and we're going to go right to it. The first question I want to ask is, what does FIRPTA, which is FIRPTA, stand for?
It stands for Foreign Investment Real Property Tax Act. And it was enacted in 1980. And the reason that law came into place was that at the time, foreign people were selling real estate and they were taking their money into their home country and they would never pay tax in the United States. So our government finally caught that and they were like, well, we need to do something about that. So that's why we have FIRPTA in the first place.
Yeah, because we have to pay our taxes.
Absolutely. Even if you're a foreigner in the United States and you generate income, you have to.
All right, so and let me backtrack a little. So what happens here for a seller, and we're specifically talking about a seller in this video. We are going to be doing another video talking about a foreign buyer, but on this one we're going to concentrate on the seller selling a property here in Florida. What does the seller need to know?
Okay, so the seller needs to know that he is subject to FIRPTA. What does that mean? Well, it means that he is going to be taking some money from his proceeds, and actually it is 15% of the gross sales price at the time of closing. So he won't get that, but it needs to be submitted to the IRS as a tax prepayment. Now, 15% of the gross sales price, that is a lot of money. And there are cases where they're selling at a loss, for example, but still it doesn't matter. The calculation is done on the gross sales price. So let's take an example. If they're selling for $450,000, then the withholding is $67,500. And at the time of closing, the title company has to take the money out and send it to the IRS. That is the general rule.
Yeah, and I get a lot of questions, sellers that say, well, I'm only netting $10,000 after I pay all my commissions and my mortgage and all these things off. So I want you to take the 15% off the $10,000 that I'm netting. It is not the net amount. It is a gross amount. So that does become a lot of money. And I know we're going to kind of talk about this a little, but as a title company, I am required by the IRS to collect this, and automatically at closing, if the seller hasn't dealt with this ahead of time, and we're going to be discussing this, I have to send that money to the IRS. So that is a big chunk of money when you're expecting a certain net out of the sale. So can you explain the process that the seller can do in order to not have to pay this?
Absolutely. And your example was perfect with that, with the netting of $10,000. So let's assume that that's the case. Then the $67,000 would be a lot of an overkill, really, yeah, on the payment of tax. And there is something that the seller can do before closing, and that is called filing an application for reduced withholding. So what we do is we show the IRS ahead of time that the seller only has a gain of $10,000 and that the tax can never be as much as the 15% on the gross sales price, and submit that to the IRS before closing. So we show them the gain is only $10,000 and the tax is amount X, and then the IRS will come back. We have to submit all kinds of documentation with that, and then the IRS will come back and hopefully agree with us. Usually they do. with the calculations that we do. And then the title company, you as a title company, can give the money back to the seller without having to submit it to the IRS. So the way this works technically is, at the time of closing, the money is still withheld. It stays with the title company because the processing time of the application at the IRS is about 3 to 4 months. So usually we don't have 3 to 4 months before closing to get this application filed, because there are certain things that need to be in place. So then the title company holds on to the money, and after the 3 to 4 months, the IRS comes back and agrees we only want $2,000, for example, in tax, and then the title company can give the money to the seller. Versus if we don't do that, the $67,500 from our example gets submitted to the IRS. The seller has to, they still can get a refund, but they have to file a tax return in the following year. So first of all, they need to wait until the calendar year is over. Then they can file a tax return about in February of the following year. The IRS has 6 months to process the tax return, so we're also already into August of the following year. A lot of times there's questions that come up, so usually it takes about 1 to 2 years for the money to come back to the seller. So there is a high incentive to file the application for reduced withholding to just get the money back sooner.
Right, and I always feel bad when I have to, withhold the money and they haven't done anything ahead of time. I can't just hold the money and say, well, you can file now. You have to file prior to the sale in order for me to be able to hold the money in my escrow account and wait for a decision by the IRS. Otherwise, I have to send it in. Am I correct with that?
Absolutely.
Okay.
Yes. The application for reduced withholding has to be filed before or the latest on the date of closing. So when you have somebody sitting here at the closing table signing the documents, it's too late, because there's no way even we can get this done in 5 minutes. Yeah. So there is a certain time ahead of time that we need to process the forms and to send them in. So yes, at the date of closing, it's too late, and you have to send the money. You're not allowed to keep it.
That's right.
And actually, if you do, the IRS penalizes you for it. There's heavy penalties and interest that you have to pay if you don't send the money in.
Right. Okay, so what does a seller need to do to get all of this done?
Okay, the first thing that they do is they contact us.
Yes.
Then we find out if they have a taxpayer identification number. We use the term ITIN. It stands for Individual Taxpayer Identification Number. So if somebody throws the ITIN around, then now you know what it is. That's the first thing that we find out if you have as a seller. If you don't, it's not a problem. We apply for it at the same time we file this application for reduced withholding. Also, we need documentation from you, which is the settlement statement of the purchase. So we need to be able to show the IRS on a document how much you paid when you originally purchased the property. Also, receipts of improvements. If you installed a new kitchen, whatever it is, all those receipts, they count. And we need copies of those to submit as well. In addition to that, we do need signatures from you. So a lot of those get emailed back and forth. Sometimes there are a few originals that we need, and that we need to take that into consideration as well, especially if the people aren't in the United States. So there's, we need to count either overnight time or even postage time, which takes sometimes a week or two for the documents to come back to us. So those are all things that we need to be aware of for the seller to be able to file this application.
And you work really closely with us or the title company that's doing the closing in order to get all of this documentation together. Do you also collect a proposed settlement statement for the sale, or is that not part of it?
Yes, absolutely. That's something that we would get from you.
Okay.
And yes, during the time before closing, we coordinate a lot of things between you and us, because there's documentation that we need from you. The preliminary settlement statement, you will need copies of what we file, including the proof of mailing, so that you can safely keep the money in your escrow account and not be penalized by the IRS for doing that. So there's a lot of background work that goes on that the seller is not even aware of, but just happening between the title company and us.
Yeah, so we do need to get that process started right away, because like you mentioned, this can take up to 3 to 4 months, right?
Yes.
Now, yeah, go ahead. I'm sorry.
Yes, the processing time at the IRS is 3 to 4 months. Now, if the seller doesn't have an ITIN number, we need to add processing time for that as well, and that's about 6 to 8 weeks. So in that case, it would take about 6 months for you to be able to release the money to the seller, which is still a lot shorter than waiting for the tax return and all of that.
Right. So that doesn't mean that they have to do this all 6 months before listing the property. It just means that the money sitting in my escrow account will sit there for longer during the decision-making process of the IRS and
Correct.
the application process.
Correct. And actually, in most cases, we won't be able to file the application 6 months ahead of time, because in order to be able to file that, we need to have a signed contract. So you need to have a buyer already and the signed contract. And usually in the contract, it states that closing happens within 30 days about.
Yeah.
So in those 30 days, that is the time frame when the application gets filed, and everything gets done with the IRS. We can't start before then. So in most cases, it's exactly like that. We file the application, you withhold the money, but you hang on to it and let it sit in your escrow account until we get notification from the IRS that you can release it.
Right. Okay, is there anything else that the seller needs to be aware of?
Yes, actually there is. So let's take another example. Instead of the $10,000 that they're netting that we were talking about a few minutes ago, let's assume that they're actually selling at a loss, which sometimes happens. And even in the United States, we don't pay taxes on losses. So there wouldn't be any tax, but there is still withholding. That does not matter. We've covered that already. So even if there's a zero withholding certificate, you would be able to give the seller all of the FIRPTA withholding back. And in a lot of cases, the seller thinks, well, that's good, I'm done. Well, you're not. You still are required to file an income tax return in the following year, even though there's no refund, even though there's no net income, no gain. But the Internal Revenue Code says that if somebody has income in the United States and the proceeds of the sale of a property is income, then you have to file a tax return and report that.
And I know that it's there have been some questions, especially when we're at the table and we have the seller and buyer signed all these FIRPTA documentation when I'm collecting the money and sending it to the IRS, where the documents specifically state that the buyer is the one that is responsible for collecting this money and sending it to the IRS. As a title company, we kind of do it as a whole portion of the closing to do that for the buyer, but the responsibility is on the buyer to collect this money. Why is that?
Well, the IRS sees it from a fairly easy standpoint. Let's take out all the title companies and everything and just have the buyer and the seller sit across from each other at a table. I, as the buyer, have a whole pile of money in front of me, and I am about to buy a property from the seller, and I'm going to give the money, push it over to the seller on the other side. Well, the IRS says, dear buyer, before you do that, you're in control of the money. You need to take a certain amount, 15%, and take that away and send that to us, the IRS, and you can only give the rest of the money to the seller. So that's why from their perspective, they see the buyer as the responsible party, not the title company, not a realtor. The buyer is responsible for the withholding, and if it doesn't get submitted the right way or on time, the buyer may be on the hook for penalties.
Right. So that it's very important to hire the right title company that will do that for you as a buyer as well. There's something that we didn't discuss previously, or we may have in other situations, but if the new buyer was going to be using the property as a homestead, is there a waiver of the FIRPTA having to be sent to the IRS without the application process? How does that work?
Yes, actually there is, and it doesn't have to be homestead. It's a little bit more complicated than that. The rule is if the purchase price is $300,000 or under, and the buyer is using the property for 50% or more of the time that it is being used. So that means it does not have to be primary residence. It could be a vacation home even for the buyer, as long as they use it more than it is rented. The time that the property is empty does not count. So if they use it for 3 months and they rent it for 2 months, then this still applies. And like I said, if it's under 300,000, then there's no FIRPTA withholding at all. And if the same situation applies with the use of the property, and if the sales price is between 300,000 and $1 million, the FIRPTA withholding gets reduced to 10%.
Okay. All right. Do you have any final recommendations for a seller, a foreign seller selling a property here in Florida?
Yes. I think the most important thing is to, first of all, be aware of this, and then second of all, to get started with the process as soon as you can. And I recommend to my clients that they contact me and let me know that they're selling when they're listing. So even the closing may be months away from the time that you're actually signing a listing contract, but I've learned that in most cases, foreign people are here in the United States and Florida when they list, because they're taking personal things out of the property and things like that. And in some situations, I do have to meet the people. I do need original signatures. Sometimes I have to certify their passports, and for that I have to see the passport. So when the people are here, that's the best time to do that. And a lot of times at the date of closing, they're mail away closings and the people aren't here, and that just makes it harder for us to get the signatures and the originals that we need. So as soon as a seller signs a listing agreement and he's here, he needs to come and see us so we can get this started, even if it's months, even if the closing is months away.
Yes, don't sit here at my table in this conference room and tell me that you don't want me to send the money to the IRS because it's a little late. So you've heard it from the expert, not just me. I'm not making up this stuff when I'm sitting at the closing table trying to just send money to the IRS because I'm in cahoots with them. That's not the way it works. If, like she mentioned, if you're representing a foreign seller here in Florida, you need to immediately discuss this with them, share this video with them, and have them contact Marena. Let our viewers and our clients know how they can reach you.
Okay, that brings one topic too. A lot of times it's the realtors that let us know ahead of time, even before I talk to the actual seller, the client. It's the realtor that has questions. So I want to offer that too, to give me a call if you have any questions, if you run into FIRPTA situations that you're having trouble with. Our phone number is 239-992-3355, and you can also visit our website at www.alluretax.com. The contact information is there. There's a contact form that you can complete. It also has the address. If you want to come and visit us at our office, we are available for you to answer any questions.
And as you can see, she has a world of knowledge up there. She's definitely the person to contact if you have any questions about this. Not just me, because like I always say, I'm not the CPA. I can kind of tell you what my experience is, but I can't give you the information that she's giving you today. So I want to thank you so much for being here with us, because this is great information for our clients and our real estate agents, and they really need to know all of this. So we are going to be doing another follow-up video about a foreign seller. A foreign buyer. And stay tuned for that. But thank you so much for tuning in. I am Karina Borgia-LaCroix, the title girl and owner of American Real Title, where we perfect the art of closing the deal. Thank you.
Bye. Thank you.